So as we go through the Crude dashboard, we can begin with the market synopsis here. I've included a weekly more in-depth option to go along with our weekly updates, as well as a quick look option on the next page that highlights current prices and the major events of the past weeks. And for the most part, we have not had a peaceful week yet. As we started this semester, the first event that took place was the killing of Soleimani by the US, which caused oil prices to shoot up before stabilizing fairly quickly. This event led to roughly 1 week of tensions before de-escalating, with major news shifting to the US-China trade deal. Initially, there was a heavy amount of optimism surrounding the deal, with the following week shifting to a little bit of pessimism around the goal set shortly thereafter, followed by the coronavirus, which we will touch on more later. As you can see, events of the past few weeks have been fairly bearish and have led to a current bear market with oil off to its slowest start in decades. And news of OPEC cuts of production in hopes of keeping prices stable, which we can see why shortly, but currently they actually have not completed those cuts. They're still in the process. As we go to the fundamentals page, we can quickly see from left to right our supply, or missing supply in the case of unaccounted for crude, our demand in the middle, and our production to the right. Here in the top left corner with crude oil production, we can easily see that we've had a continuous steady growth of production, with the exception of July 2019, which could have potentially been caused from fewer draws on US crude after worries of a downturn. Since our production has been continuously increasing, we can see in our imports, which have been falling, as well as our exports, that we have been able to move towards a next net exporter rather than importer. U.S. production and production in general has led to OPEC moving towards cutting the production by 500 to 600,000 barrels a day, while they're currently waiting on Russia to go along with the deal that they've set. With IMO 2020 taking place, our exporting should not be negatively impacted and could potentially even actually help us be unaffected by the current market oversupply, since we have a very strong production of light sweet crudes. We can see with refineries being down from lower prices that this could possibly be affecting our gasoline and diesel production as well, since they've also been impacted by the lower prices. We'll be able to see later in the stocks pages the week over week changes to better look at what's happening. Lastly, with the crude inventory and stock change, not including the strategic petroleum reserve emergency supply, we can see that the currently oversupplied market has caused stocks to move upwards. China's demand being lower because of the coronavirus has definitely impacted these numbers, as crude is having a harder time finding places to go for the time being. Next, at spot price, we have the current price of WTI crude. One of the two main benchmarks for crude oil pricing, since it's a light sweet crude, and here we have a good look at its drop over 2020 so far, with continual lows. Luckily, there has been an uptick over the past week, but things will most likely remain bearish until a new positive event takes place. Below this, we have continually updated news right here. And this could help show potential impacts on the commodity, with OPEC's oil production cuts being an example to prop up and stabilize prices. Next, we can go to the forward curves. So now in the forward curves page, we see that our most recent curve is in contango, this one, the blue right here. We should be expecting crude prices to rise in the future, with past year's data to help determine what the trends will move towards. We had a drop about a month ago as a result of the Soleimani killing, which can be seen in the detailed forward curve in the top right. And overall, we can see that the data has shown a heavy amount of skepticism taking place because of the coronavirus, with the forward curves showing the first fatality to 1 week later, the quarantine, 3 weeks later, and after the Chinese market opened. So following our most recent forward curve, We currently would say that the market is depressed, meaning that storing should be incentivized since higher profits should be expected in the future. And transitioning from the forward curves, while staying on the topic of the coronavirus, I wanted to show a quick timeline from the Nikkei Asian Review. Here we go. So on January 5th, in the city of Wuhan, where the outbreak initially started, it became somewhat known with 59 suspected cases, and became a growing problem that was shortly thereafter identified as a new virus. By late January, the numbers of infected or potential cases grew an enormous amount, with multiple countries confirming they had infected people. This virus has heavily impacted the market, as China and other countries did not get to make expected profits that normally come during the Chinese New Year, and even had to shut down their market for an extended time, only reopening this past week after injecting $22 billion into the market for liquidity and allocating $10.26 billion to fight the coronavirus, as confirmed on the Reuters website. We'll see how this continues to impact the world, but it currently is believed that 37,000 or more people are infected at this point, with over 800 deaths being reported. Now here on the stocks pages, we can see the week-by-week changes as well as the 4-week moving average, which is the data following the line. With crude stocks, it's evident that the stock is rising, most likely from the current market surplus. And as mentioned previously, with the lower production of diesel and gasoline, we also see that the stocks are trending downward. And overall, it seems like the other fuels are also having lowering stocks trending down as a result of the refinery production being lower, as you can see with ethanol, propane, and residual stocks, as well as the others. So next we have the EIA Petroleum tab. Here we are. And this is part of the sourcing for where the information I've been presenting can be found, showing continuous changes as well as new issues or trends, such as how geopolitical developments are affecting maritime crude, just as an example. On the next page, we have our EIA Weekly Petroleum Status. This is where the weekly market synopsis can be found for reference. To compare the data, I'm presenting in a document form, rather than the presentable table that was shown earlier. This is also where we are getting all of our Zima Analytic data from to help produce the tables. In the Inverness drawing info table, this gives us data on week-over-week change with stock, like the previous page has shown. Just needed to load. This is helpful, however, with our dashboard, and is able to provide greater depth with changes over the few weeks, or I guess 2 weeks, rather than ours, which is giving us multiple years that we actually can now see the moving averages form. So ours goes a little bit further in depth, but this is quite helpful, since a nice aspect of it is that it gives a brief summary of what is going on in the market regarding what could potentially be impacting the stocks. In oil price intel, we have all the data on the commodity prices for oil at the palm of our hands, with the two benchmark crudes, WTI and Brent, at the top, since they are what the other blends are usually priced around, or always priced around. Also on this page are discussions and headlines easily available in the latest news regarding oil, as we can see that they're still discussing with OPEC and Russia of emergency cuts. With CNBC commodities, we can quickly see WTI in its latest prices if we go down to here, while also putting in different tools to help get a grasp on the idea of what's currently taking place. Just for example, we can go to Studies and RSI. Here we go. So with RSI being between 20 and 80, it looks like it's neither being over or undersold. However, if we see this drop below 20, there's a potential that it would be in an oversold position. Lastly, we have our Reuters page to show current events that could be impacting the market, as well as stock indexes showing how they're currently performing in the market. Overall, this is a good source for news that's affecting the overall market and not just energy, but it has a mix of everything. That should be everything in regard to the Crude dashboard. I hope this information has been of value. Thank you.